The crown jewel of significant size and magnitude of scalability is our Cellinity battery technology. And we're going to highlight that real quick. Remember, we're talking about forward-looking statements. This is an article that was posted about 5 months ago. Clean energy's next trillion-dollar business. That's long-duration energy storage. Long duration is the idea that you can pull energy from a battery cell for an extended period of time so that you can fill the gap when the grid is in trouble, right? And blackouts. There's a gap in the market that's really not going to be filled by lithium. Lithium has a bunch of problems. We always said the explosive nature of lithium is number one, this idea of thermal runaway fire risk. One cell lights another cell, lights another cell. Lithium's highly volatile when pressured under heat. You can't get it hot. That's why they take your lithium batteries when you get on the plane. Filling that void in the long duration, being able to draw for an extended period with a battery that can last 20 years, there's a massive gap in the market. Now, some people are racing to fill it, but we believe we have a technical advantage in our design that really gives us a place in that marketplace. The biggest issue, though, is this global supply chain risk. Just pick up the news and watch what's going on today. Global supply chain risk for critical minerals, infrastructure, resiliency for the grid, made in America. All of these dynamics are coming to really bring some of this manufacturing and resource capability back to the United States. So the timing for this for us is actually incredibly excellent. So what do we got? We got a battery that's safer, sustainable, durable, and more efficient. We can defend all those claims. I'm going to break them down for you real quick. This is a great comparison. I put this in the deck, not that we go through every word here, it's too much, but you can come back and look at it later, right? And we compared ourselves to the competition of other science-based technologies in the battery space. Here's the simple punchline. When you compare it to a lithium, we're 2.9 times the energy density. It's an astonishing claim. In fact, in the battery industry, that's the one I get the most skepticism on. People look at me and they go, well, that can't be. Yeah, it is. So there's a journey story here, and that's the inventors originally came from the University of Tennessee. They invested over 8 years in R&D to advance these technologies to a commercial readiness state. At prototype stage, 2 of the founders passed away. It was just such a sad story. The son saved the technology, ended up bringing it to us, and we looked at this and we said, oh my gosh, it's such a significant, timely opportunity for the world. And so we decided to make a business deal, acquire the technology, and then advance it and replicate the data. Now, this is really important. We had to replicate the data that was accomplished by the original inventors. We thought that'd take us about a year, right? Well, guess what? It took 2 years and 4 months, and it was a little more expensive than we thought. So it took some time, but we've done that. We're now in a position where we have proof of claim. We're now in the advancing to the a scaled up version of a larger cell. We've designed a business model that allows us to build factories all over the world. And this is a hot salt battery that operates at 220 C. You have to change your thinking about it. It's a fixed site grid scale. This is the competitive put up. EOS is a great example of a comparable. It took them 10 years. Massive investment. They just brought in 260 million. The market cap a little over 1.2 billion. Some big competitors in this space. Okay, the technologies are the differentiator. We've got a technical advantage, we believe, against all of these propositions. And then the question, of course, is how you're going to scale. That goes to our business model. Here's where we're at in the journey. We developed a business model that we call a franchise model. Right? Don't sell batteries. Sell battery factories. Why can we do that? Well, because we have a technology that leads the way, number one. And then number two, we have the skill and the expertise to actually build those factories with our talent from our engineering group that's worked all over the world and built $200 and $300 and $400 million projects for over their career. This is a perfect situation in our wheelhouse for execution of our core competency. And then, of course, leveraging the balance sheet. The idea behind a franchise model is pretty simple. Give more than you take. It's just real simple. Give more than you take. Why is that so important? Because it allows us to actually record revenue as we enter into the build phase. And then we participate in the equity that's created and the cash flow that's created post-build as a minority equity holder and a royalty for the license of the execution of that franchise. So we're at this middle of the deck here. Complete the third-party validation. It's underway now. It'll report soon. When we run the analysis on a 7-factory build, which is pretty light, these are about 150 million a piece. Those factories will generate about $500 million a year in revenue. The profit margin expected is north of 16% after debt service and after royalty. 16% on $500 million, right? Okay, it's an astonishing business opportunity. The net present value puts us in at about 1.5 billion today. Of course, we have to justify that, right? That requires execution. So that's what we're doing. So we're raising money at a small valuation to get through this high risk stage to continue to scale up and validate. The next stage will then be in the execution mode. We've got a series of MOUs scattered around the world. A couple of parties want to do multiple factories. As you can imagine, there's financing available, there's credits available, there's economic incentives for workforce development, all sorts of incentives to see the creation of these local investments. We're not selling batteries, we're selling battery factories. So we think this is a time for this business model and for this asset to shine in a global way. We've got a number of MOUs already signed. We're working through the financing opportunities to see if we can pull those into go mode. And so we're hopeful. It's hard to predict the exact time frame. It starts with credibility. It starts with third-party validation on the battery tech. So that's underway. So stay tuned. We're pushing hard.